back to India Business Insights, your trusted source for clear, accurate, and balanced analysis of India's economic landscape. If you are new here, make sure to subscribe and hit the notification bell to stay updated with our latest deep dives. Today, we are dissecting recent cautionary reports based on high-frequency economic data. Alarmist interpretations are prevalent, but we are here to separate facts from fiction by meticulously examining hundreds of data points from numerous reliable sources, including comprehensive monthly datasets. Consumer demand, the heartbeat of India's economy, shows varied signals. Digital transactions, especially through UPI, are surging, demonstrating robust formal economic activities. Steel consumption is also climbing, driven by infrastructure projects and industrial demand. Increased e-way bill generation and toll collection suggest a solid recovery in logistics and transportation. Yet challenges persist. FMCG and consumer durables production remain contracted, signaling consumer caution due to economic uncertainty and prior high growth periods. Declining two-wheeler sales further underline stress in rural and lower income segments. Moderate growth in personal loans and credit card usage emphasizes cautious consumer borrowing. Interpreting this data requires nuance. For instance, reduced electricity demand could result from mild weather rather than economic weakness. Cultural factors such as the Sharad period impact seasonal buying patterns, affecting two-wheeler and durable goods sales. Additionally, demographic shifts, especially younger populations moving from rural to urban areas, are redistributing consumption geographically, creating complexities in demand interpretation. GDP growth projections present a cautiously optimistic outlook. Strong investment activity, bolstered by significant government capital expenditures and new project announcements, signals robust economic momentum. Agriculture remains resilient, supported by favorable monsoons and government policies. However, manufacturing remains modest due to subdued consumer goods production. Industrial production reveals mixed dynamics, with vibrant capital goods production counterbalanced by softer consumer goods outputs. The services sector is a standout performer, yet external trade volatility and looming global tariffs concerns introduce potential risks. The Indian stock market paints a complex picture. Relative underperformance against global indices reflects investor caution stemming from international tariff uncertainties. However, technology stocks outperform due to robust global demand, contrasting sharply with power sector stocks affected by regulatory uncertainties and reduced domestic demand. Market volatility remains heightened due to geopolitical risks. Financial sectors experience selective optimism buoyed by increased corporate bond issuance, facilitated by favorable borrowing conditions. Nonetheless, conservative lending practices and slowing credit growth underscore caution in financial markets. Fiscal policy demonstrates disciplined governance, evident from India's manageable deficit and strategic public investment. Despite slowing direct tax revenues, stable GST collections signal normalization post-pandemic recovery. Monetarily, conditions are supportive with ample liquidity and stable inflation, CPI around 2.8%, allowing the RBI to maintain a prolonged pause on rate hikes, possibly considering future easing. This monetary stability supports economic growth, although resilience regarding global commodity price volatility remains essential. India's external sector remains resilient amidst global volatility. Reduced imports of oil and gold contribute to narrowing the trade deficit, supported by moderate commodity prices and cautious domestic consumption of gold. Strong forex reserves, $702.8 billion, and currency stability fortify India's economic resilience. However, unresolved trade negotiations, especially with the US, create uncertainties and potential challenges for export-oriented industries. This delicate balance between global policies and domestic stability demands careful monitoring. Real estate, particularly premium residential segments and office leasing, demonstrates robust resilience. Office space demand, driven by global capability centers and tech expansions, significantly supports urban development. Conversely, industrial sector growth is selective, highlighting disparities between robust capital goods demand and lagging consumer goods sectors. Services continues to thrive, driven by urbanization and logistical improvements. Agricultural indicators are strong but tempered by moderate rural income growth and declining Manrega participation, reflecting cautious rural spending behavior. Financial markets are seeing rising mutual fund investments, signaling growing financial awareness. However, traditional savings like bank deposits and fiscal assets remain dominant, reflecting conservative household financial behavior. India's household savings rate remains robust at approximately 30.7% of GDP despite slower consumption. Mutual fund investments are increasing but still represents a small fraction compared to traditional financial instruments. Households increasingly prefer physical assets such as real estate and gold, indicative of cautious optimism and investment preference amid economic uncertainties. Domestically stable commodity prices contrast with rising global commodity trends, potentially affecting import inflation. Structurally, the Indian economy is shifting towards investment led growth, emphasizing infrastructure development and manufacturing capacities, supported by ongoing digital infrastructure expansion. Interpreting high frequency data is inherently complex. Seasonal factors, cultural buying practices, demographic shifts, and even mild weather conditions influencing power demand complicate accurate economic assessments. Additionally, migration patterns and the extensive informal economy add layers of complexity, demanding careful and nuanced analysis. Looking forward, India's economic outlook remains cautiously positive. Strong performances in infrastructure, services, and select consumer segments contrast with persistent challenges in rural demand, discretionary spending, and manufacturing breadth. Global uncertainties, particularly concerning trade and commodity price fluctuations, necessitate continuous vigilance. In conclusion, while acknowledging cautionary signals from certain economic indicators, it is essential to avoid alarmist narratives. Recognizing the Indian economy's inherent resilience and ongoing structural shifts is crucial. India continues navigating complex cross currents, demonstrating both robustness and area of vulnerability. Balanced, context rich interpretations will guide us clearly through these challenging times. Thank you for joining us at India Business Insights, your partner in navigating India's economic landscape. If you found value in this analysis, please like, share, and subscribe. Comment below with your views, and we will see you in our next insightful episode.